Hey, Movie Trades! Want to do a quick video analysis update on why smart Elliott Wave bulls might be looking for or waiting for a correction in Nvidia and Meta, formerly known as Facebook. Now, this is obviously just for me. I still own Nvidia, and I like FBY. I own a little bit of that too. The Yield Max ETFs that own Facebook, and they don't own Facebook or Nvidia, but they have out of the money synthetic covered call positions. They sell on them using a synthetic option strategy. Anyway, those, in my opinion, are very good for stocks that are consolidating within an uptrend. I've collected a lot of dividends from Nvidia. Honestly, even while it's been up in this range, this chop has been very profitable, and that's something that before yield max ETFs, before a lot of things that have come out recently, even FEPI now trying to do this with the best 15 tech stocks equally weighted, I believe. But anyway, let's just get back into Nvidia. This large rally I predicted. We've been told it was AI. AI is why all this happened, right? But really, this was the 78.6% retracement of this 5 waves advance. Basic Elliott wave said the length of wave 1 placed at the wave 2 low was going to be hit for wave 3. That did happen. So, nice little hit there. I think, though, that for me personally, I'm looking for a correction in Nvidia and Facebook, and I'm looking for not just other members of the market, but even other members of possibly their sectors to get a little love. They've really led, and honestly, I think there's still going to be big winners in the long term. The first quarter, the first half of the year, the theme that seems to pop up more often than not is that the real big tech winners from most of the previous year take a breather, and the market reminds us that there's other names in the stock market besides the 2 or 3 big tech winners. I think specifically for Nvidia and Facebook, that little setup where they have a first quarter correction, it is likely. So let's try to define some levels realistically. Nvidia is going to be a tough short. And the reason for that is it's so close to an all-time high. I don't know much about its short borrowing fees. Now, I'm not interested in shorting Nvidia. What I'm doing, I've got straddles on the Metaverse ETF METV and strangles on the Metaverse ETF METV. And as far as in Nvidia, last I checked, in Meta are pretty big holdings of that. But as far as I checked, yeah, I don't really know where I was going with that. But I have straddles and strangles on the Metaverse ETF, and I'm still interested in owning NVDY and FBY. But what I've said before, I usually like to do with these ETFs is um, I like to blend the yield max ETF with its underlying. So, could Nvidia keep blowing off top here? Sure, Nvidia can keep blowing top, here for a while. That's certainly possible. And even, is there a Super Bull scenario? Yeah, I mean, I guess the Super Bull scenario would be this is all the bull flag. This was a pretty short consolidation period, and Nvidia is going to go to, the moon. And to be honest, you know, that's one reason I'm more interested in just kind of preparing for this with long gamma positions, and most importantly, cash to buy the dip. Instead of just owning the yield max ETFs, I would be interested in blending these with their underlying. If we look at what could bulls look for, well, I think 515. It's not far away, and realistically, like that wouldn't invalidate anything. But the closer that Nvidia gets above 500, and if we look at this RSI, this is also kind of giving a little bit of a hint from an Elliott wave perspective. Its wave 5 ends with momentum divergence. So it very well could be something like this. 1, 2. We have wave 3 making the highest reading. It's very possible we had a shallow wave 4. And we've even ended wave 5 higher. So that's going to end a 5-wave sequence, I guess. Would be one way to say that. So some people are going to look at this whole count and they're going to say 1, 2, 3, 4, 5 waves have ended. We are seeing momentum divergence, but even just within this cycle, there's a chance for a shorter term consolidation period, and that's really more what I'm interested in. Where from this rally that's occurred, we have 1, 2, big wave 3, shallow wave 4, potentially setting up a wave 5 to end. So what kind of happens in these scenarios? Well, the kind of ideal scenario for me, Nvidia maybe goes a little bit higher for a blow off top, and then it has a consolidation period. And this is kind of the ideal consolidation period that I'm looking for. Should it happen at all? And of course, a lot of people don't like saying this, but in wave theory, the impulses 1, 3, and 5 are what are supposed to be traded. The corrective waves are supposed to be prepared for. So I'm looking for someone like this out of last year's big winner. Maybe get some rotation within tech, but I've made a lot of points about how I'm looking for I'm looking for even some other sectors besides tech to get a little bit of love, and I wouldn't even be surprised if we had a little bit of a VIX spike in the first quarter, first half of the year. Wouldn't be unprecedented at all. So anyway, I'm interested in taking some profits on Nvidia and still collecting synthetic covered calls, but I'm also more looking for a little bit of a correction in that name to buy the dip and keep going for the next leg higher. Facebook, very similar thing. How just from this low, very strong rally, but we also have this possibility of 1, 2, 3, 4, 5 waves up, ending with momentum divergence, and just kind of a classic winner theme. The 4 or 5 best winning tech stocks. Nvidia I slaughtered, Microsoft I slaughtered, a few others I slaughtered. They kind of just take a little break. They just kind of take a little break, and they remind the rest of the world that there's other parts of the market. So again, I'm not going to go all balls to the wall, deep puts, deep Nvidia puts, deep meta puts. I have metaverse ETF straddles and strangles. Currently, I own some of these yield max synthetic covered call positions, but I'm looking for some money to rotate out of Facebook in the metaverse. Is this a crash post, pup, or are we crashing? Well, obviously we could crash at any time, but no, I really am just looking for a little more spreading of the love. And maybe that won't happen at all. Some guy on this unusual options chain, we can look over this. He was looking at futures. He was not futures. He was looking at calls on VXZ. VXZ is a midterm futures ETF. It's not, it's kind of an interesting choice of the calls they were buying, but typically, the March quad witching, it's very rare that, especially after a hyperbolic vertical year, we get all the way through the March quad witching, and tech just kept going to the moon, uninterrupted. That fourth quarter rally just never stopped, right? It just uninterrupted goes all the way to the moon. I would say one reason, and this is just even within the market, that I'm kind of looking for a little more of a rotation and less of a crash. Of course, it's not going to feel like that when it's happening. The news isn't going to come out and say, hey, this is actually just a rotation into some of those ARK small caps and some of those value names you forgot about. They're not going to say that. So I'm prepared for the VIX to spike. I'm prepared for that first quarter opportunity we tend to get. But one reason I wouldn't quite be looking for this to be a crash call is there's a few Um, XLI industrial ETF. I've made it clear this is what this ETF is. From this low 1212, we look at this RSI, highest reading on the RSI, suggesting it's a nest in the larger wave count. Also, would suggest with this break that XLI, the industrials, are incomplete. So I'll show what that means. I've talked about this, but basically, we're in the middle of a wave three or a wave one, wave three. Sorry, of a wave three or a wave C. My bad for XLI. If you say enough letters, eventually the wave count will be right. But anyway, I think in the big picture, XLI is something like this: wave one slash wave A. Wave two slash wave B ends, and from this low we form 1 2 1 2 wave three of wave three, and it looks like we are making our way similar to SPY, making its way to 600. It does look like XLI is making its way towards that equal X target of 142. When I look at, an ARK would be a similar thing where from this low, we also have a little bit of nest evidence. So, I think that, we're going to see new leaders in 2024. That's what I think we're going to see. New leaders in 2024. Unfortunately, at least for the short term, I do look at those wave counts of two of last year's biggest leaders, Nvidia and Facebook, and I wonder, if a little bit of money, honestly, just to be frank, I think even if someone was the biggest bull in the world, and more specifically, even if a financial institution was the biggest bull in the world, they want a little money to come out of Facebook and Meta so they could take advantage of some volatility, buy a VIX spike, and restart that option cycle. XLI and ARK would be two examples I'd give where from a low 1 2 1 2 RSI suggesting wave three of wave three. The money's got to come from somewhere. Maybe it'll come from Nvidia or Facebook. Maybe they'll keep going to the moon. Who knows?